On January 19th, 2024, I posted this market prediction video forecasting every market move about to happen on the Dow Jones for the entirety of 2024. I find it eerie that in this video I joked about coming from the future, because most of my predictions turned out to be true. Apart from Santa Claus not showing up, everything else was spot on. I can't remember how many times I've asked my viewers to pay attention to these predictions. But if this is your first rodeo, don't worry. We are doing the same thing over again. This time, we are taking a swing at 2025 and giving away what I'm hoping to be another accurate prediction for the Dow Jones performance in every month of the year. In this video, we will go through everything: the yearly forecast, the trade ideas, the decennial pattern analysis, and the yearly performance stats. Let me tell you right off the bat, 2025 is going to be loaded with trade opportunities. We'll discuss opportunities for swing trading, long-term investing, and even short-term investors will get some rare insights. Just stay with me, because the story of how the market is going to move in 2025 is pretty interesting. I like to do this thing at the beginning where I take a general overview of the market sentiment. What are the institutions doing? What is the market maker's state of mind right now? And while I was doing that research, I came across something pretty interesting. Now, you might already know that Warren Buffett sold $75 billion worth of Apple stocks throughout the second half of 2024. And he also sold 3 million shares of Chevron in the first quarter. Both of these stocks contribute enormously to the Dow Jones and effectively the entire market. Looks like the Oracle of Omaha is forecasting a bearish 2025. But it doesn't end here. You'll be surprised to know how much cash Berkshire Hathaway is sitting on right now.
You're sitting on $168 billion of cash, which you told us today is now more than $182 billion. His questions are: one, what is Buffett waiting for? And two, why not at least deploy some of it?
I don't think anybody sitting at this table has any idea of how to use it effectively, and therefore we don't use it, and we don't use it now at 5.4%, but we wouldn't use it if it was at 1%. We only swing at pitches we like.
The man said it himself. No one on the board of directors sees a lucrative opportunity on the horizon. Some sources claim his pile of cash is estimated to be $277 billion. Others say it's closer to $325 billion and growing. He's still exiting the market up to the date of this video. So if Warren Buffett, one of the biggest investors on the planet, is bearish on 2025, why oh why am I predicting a very bullish year? Well, answer is quite simple. I actually mentioned it in the same 2024 prediction video that I showed you earlier. Many banks and market experts have warned of a major recession and market crash. But that time hasn't come yet. We'll have to wait until 2026 for that bearish sentiment. So am I implying that Warren Buffett sold an entire year earlier than he should have done? Yes, that's exactly what I'm saying. And it's not the first time he has done it. Back in 2004, Warren Buffett started piling up cash like there's no tomorrow. By the end of 2005, he had made an all-time high of cash allocations in the history of the company. During 2006, he started buying back. You can see a major decline of cash in 2008 as soon as the financial crisis started. He was buying all the way till the end of 2009. I think what's happening today is the same story over again, but instead of 2005, it's 2025. Buffett will continue exiting positions in 2025 as the market makes new highs. We'll see a new all-time high in his cash allocations. And as soon as 2026 arrives, the market will go through massive corrections. Then he will start buying back. And please keep in mind, when you are moving a conglomerate this big, it takes months or even years to complete a U-turn. Exactly like steering a massive ship. You have to look many steps ahead. Another thing that caught my attention was the Fed rate cuts. The Federal Reserve indicated in a policy statement back in December that it is forecasting just 2 interest rate cuts in 2025, not 4 as previously projected. How I think this will play out in the narrative of 2025 is interesting. I believe this was one of the main reasons why we didn't have a Santa Claus rally in the last 2 weeks of December. The Federal Reserve is basically saying that Dow is overvalued at the moment. And when you combine that with the bullish forecast for 2025, it only means one thing. A drop is about to happen at the beginning of the year during the first 3 months. And this will be followed by a massive rally. If we consider that to be one of the negative forces affecting the Dow performance, there's a massive effect happening on the positive side, and that being the AI boom. We are about to see even more cash getting thrown at AI. And just like what happened during the dot-com boom in fueling speculative stock market rallies, the same is going to happen over the next 5 to 10 years. And don't forget that during the dot-com era, the Nasdaq soared over 400% from 1995 to 2000 peak. And many investors are eyeing an entry into the AI market to repeat the same cycle. This is probably what institutions like Warren Buffett are looking to achieve, buying some Nvidia or any AI stock for cheap. We already know he likes to play the long game. And what long game, you're asking? It is something that I've talked about many times before. He's respecting the decennial pattern of the market, which brings us to our next point. Alright, for those of you who are watching me for the first time, we have discussed this theory called the Decennial Cycle. It's a stock market study that has consistently given accurate predictions of how the stocks perform in certain years. According to the Decennial Cycle, years ending in 5, like 2025, have historically been the best performing. We call them the phenomenal 5, while years ending in 0 and 6 are some of the worst performers. So in order to backtest this study, here's what I did. I looked back over a period of 120 years of market data and calculated the Dow Jones performance in the years ending with 5. And this is what the average performance looked like. Notice this trend continuations throughout the year. It's almost like we are in an everlasting uptrend. All the corrections are soft landing, always printing new higher highs with an overall gain of 20% from January to December. Now, if you're a long-term investor, this all sounds like music to your ear. You can load up on stocks right now and sell blindly in December. You will end up making a decent profit of 15 to 20%, not to mention the dividends you might be entitled to. But if you're a shorter-term investor, it might not be that easy. Remember, many institutions are affected by the roadmaps of big institutions like the Federal Reserve and Berkshire Hathaway. This means they too are exiting Apple and Chevron stocks just like Buffett did. I have to remind you that the Dow Jones groups together the prices of 30 of the most traded stocks on the New York Stock Exchange and the Nasdaq. And you guessed it, Apple and Chevron are at the very top of that list. So of course, they will affect the US 30 performance, not to mention the many more correlated stocks and positions. This wave of selling will cause the Dow to plummet during January, February, and March. Now, the big question, when these institutions unload, and I'm not talking about retailers here, I'm talking about big institutions who know how to sell at a premium. How is it going to affect the market during my forecasted bullish trajectory? And this is where a lot of other factors go into play, like the fact that we are in a post-election year. And not any post-election year, mind you. This year, we are having the same old Trump again, with a new agenda for economic reforms. This has volatility written all over it. Since 1977, we have seen 12 election cycles. When I compared the post-election years, I came across an astonishing finding. Out of the past 12 cycles, 9 of those were bullish, generating profit percentage up to 31%, with an average of 20% over the year. So if you put $500 in January, you would expect to see $600 in December whenever we are in a post-election year like 2025. And out of those 12 years, 3 were bearish, with a 10% average decline. Now if we take a look again at the decennial pattern prediction, we can see the same exact picture, bullish, and 20% increase over the year. But being in this market for a little over 11 years molded me into a skeptic. This is for every market opportunity that I come across. I like to look at the worst case scenario of everything. So I decided to take into account every post-election bearish year as well. And here it is, my prediction for the Dow Jones in 2025. I went with a realistic prediction of 10 to 15% of gains. Although I'm very bullish on the year itself. I am, however, pretty realistic when it comes to the Dow Jones now. I think we might see a market appetite for small caps. So throughout the year, there will be situations where I'm more bullish on the Russell than the Dow. I will definitely talk more about that throughout the year. But of course, we still use this Dow roadmap as our guideline because the Russell is positively correlated with Dow. Alright, now let's move to the juicy stuff. I will discuss my 7 predictions for the Dow in 2025. What I like to do is explain every trade opportunity that you see on this graph. No need to take screenshots. You'll find all the predictions and the trade ideas in the roadmap PDF. The download link is somewhere in the description box. As I previously mentioned, during the first 3 months of the year, the performance of the Dow Jones will be very weak. That's why our first trade idea of 2025 is going to be a sharp 6% decline from the tops throughout February. This is typical from a month known to print new lows. But don't get FOMO by how low it can go in February. We'll have to look at the fractals and wait for some sideways action in March, so we can determine a good entry to the following trade. Trade number 2 is one of the best trades of the year with up to 10% of gains for this trade alone. 10% means the price will be catapulted, so you could end up making 2 or even 3 5R trades from this trade alone. That's an entire prop challenge, by the way. And what does this one trade need? Nothing but patience, really. It could take up to 9 weeks to reach the target. From the start of April to the first week of June. Moving on to the first week of June, the market will finally decide to correct. It might look small, but this one is actually a massive drop. I forecast a 3% decline in price, giving us a potential for a short. This is our third idea of the year. The summer will kick off swinging with a powerful rally to claim new higher high. Keep an eye on the month of July. This is trade number 4. And I see great potential in this trade. It could definitely be used in a trading challenge, or you could even base a trading challenge around this trade. This is for 2 reasons. Number 1, because of the rally obviously, but also number 2, because of how quick this rally can get. So you'll pay less swaps and impatient traders can finally see some profit. Trade number 5. And look at that. We'll see another big drop before the final big rally. This will be a 5% drop over the span of 2 months, August and September. What I like to do in these situations is find multiple entries and take profit, and just stair step with the trend riding multiple shorts. And here it is, trade number 6, and the magical big rally of the year, all the way from the end of September to the beginning of December. Over 10 weeks of claiming new higher highs. This move alone will generate 10% of profits. So as a short-term investor, this is definitely one of the best entries of the market. Mark the date, last week of September. And as always, we end the year with the Santa Claus rate in the last 2 weeks of December, but I don't expect it to be strong. You might have noticed that although this market forecast is based on a worst case scenario and taking into account all the bearish outliers with little to no averaging, I still predicted very bullish April, July, October and November. This should give you an indication of how big this year is going to be in terms of gains. So whether you are pessimist or an optimist, you should bull on 2025. Stay green, and I will keep posting trade ideas every month of the year. Your love and support means the world to me. See you in the next one.